Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a fantastic, wonderful day. Taking a look here at Bitcoin again, up 5% on the day. We're soon to see the daily candlestick close here within about an hour or so. I'm just kind of trying to get ahead of here, see kind of where we're at, what we're looking for in a daily candlestick closure, and just generally the best practice for situations like this. We do take a look at my analysis that I sent out from earlier today, just kind of catch you up to speed. We have broken free from this bull flag. We also have potential areas of retracement here. This is more macro. We got 65.3 and 64.5. I think 64.5 should be the bottom. I'll explain more about that here in a minute, but generally speaking, that's a rough estimate on what I expect the price action to do moving forward. While it could still pull back, we have a ton of support in that 63 to 64K range. It wouldn't make a ton of sense there. The only thing that leaves me slightly concerned is that we have a pretty high amount of long delta, which implies there's way too many longs in the market and that they could potentially get swept here with some massive selling pressure. This could happen in the next couple of hours when the traditional markets close and, well, they've already closed, but when Asian markets open rather. Okay, so kind of just something to think about. And again, from a liquidation standpoint, 67K seems like a likely next target just based on how much is there. All right, so again, that's just kind of an update from before. What we want to look at here is some back-end data now, kind of see where we're at, and generally kind of make an educated decision on what's going to happen next year. Because generally speaking, when the price action maintains a range like this, we can expect it to continue to hold, mainly because there's a lot of volume flowing into the coin. Okay, so that reaffirmation of volume really helps us give a substantial potential amount of stickingness here. Again, I don't think any of those words actually are in the dictionary, but you get it. I think we're going to have some stick-to-itiveness, perhaps that one works, for the price action to maintain this level and go higher to about 67K. So as we can see, some late shorts here, potentially going to get swept here soon. We can already see 66.3 getting retested right now. Is that going to hold? We'll find out. But the consensus here is that we got a lot of liquidation above the price, not as much below. But you got to recognize too, the last 5 days we show a lot of liquidation below the price too, and I'll explain that here in a minute. Again, just to reaffirm here, each one of these bars is anywhere between 7 to 10 billion. 1, 2, 3, 4, 5, 6, 7. Yeah, that's 50 to 70 billion in liquidation, upwards of 67,000. I think there's a strong chance that'll get hit. Either way you look at it here, we look down below. Let's go and refresh this actually. Make sure we got the right chart, and we take a look at liquidation delta, still very high at right about 8 billion. So that's the only thing that kind of leaves me a little bit concerned, just having so many longs in the market that will eventually have to start to dissipate. It's either A, longs taking profits and securing that profits, closing their positions, or the price pulls back to force that. Okay, the hand could get forced. But just to reiterate and reaffirm, in case you didn't catch this from earlier, the consensus here is that open interest is at 62.5 or that low 62K range. So the price does travel back into that 62,000 range. We should experience some support based on open interest. Again, that's not a guarantee. That's just kind of a small little factor, but something to be mindful of. So daily time frame, what are we looking at here? Let's quickly zoom in, kind of see what's up. And when we do take a look at the moving averages, we can recognize that, again, we catapulted off of that 20-day SMA and blasted straight through the 200. Another thing I want to reaffirm too here, and a lot of folks kind of seem to think that moving averages are like support levels. They're kind of ranges in a way, but they're mostly just identifying the trend, right? In the last 20 days, we're maintaining above the trend, so that trend is continuing. It's our friend, right? So right now we're above all moving averages. That's a very, very good sign. That reaffirms the fact that this 63.5 to 64K range, it's kind of a rough estimate, is a strong support level for us, so the price does pull back, okay? It does pull back, we'll see a lot of support in that level, and the price would effectively bounce off that local point of control at 63,000. The macro point of control too, if we zoom out, just to kind of give you perspective, if I recall correctly, it is still 63,000. Let's go ahead and double check and see where that's at now. Yeah, 62.9, 63K. So it's really effectively the same thing. So that's good to know because we're on the right side of those tracks, right? You don't want to short into that, or heaven forbid you do end up shorting. I don't think that's a good recommendation right now with how much volume we're seeing. A short to that range would be appropriate. Do not try to short to zero, or don't try to short to 60,000. It makes no sense. You work within your support levels. Like for example, with our Bitcoin short that we took here recently, we took a Bitcoin short, as low as, I think we took good 20% off. It wasn't anything spectacular, but it was a short from 62.3 to 61.5. Okay, so again, really good little trade. Oh no, correction, I'm sorry. That was prior to that. 63.3 to 62.05. That was essentially our target, and it bounced right off 62K and took off, right? So again, you can make some good profit, but again, had we gotten greedy, we would be totally, out in the rain because Bitcoin's just taken off. Right. Either way you look at it, awesome stuff there. We got tons of other signals that took profit. We took profit on Solana and Near Protocol. been a very good 24, 40 hours for us. We do have a few other open positions right now as well, so I'm very interested to see kind of how that works out. But the point of the matter is here, Bitcoin's strong. You don't want to short into it. We have nothing but longs open at this point. We do take a look, though, of course, at the RSIs and everything else. We're really in that sweet spot, below 70, above 50. Money flow index is increasing, stochastic swinging up, MACD converging, trend strength indication over 0. These are all very, very phenomenal signs. So does this mean the price can't pull back? No, it just implies that if it does pull back, we got a ton of support below us. The likelihood of the price pulling back right now is becoming lower, mainly because we're maintaining really well at this higher range. I know it seems kind of crazy, but the likelihood of further upside if we maintain this range is pretty high, just because that's a local high. A lot of liquidation has been swept. The only capitulation potential is, once again, this delta being pretty high. We're probably due to see somewhat of a pullback, but it may not result in a pullback. It'll start to dissipate if longs start to secure profits and there's less incentive for the shorts to want to push the price action down because they have too much opposition right now. There's too many people taking longs. There's no point in selling because everyone's buying. It's an interesting phenomenon how this works out, but generally speaking, you don't short into it. I think I've said that a few times, right? Do you understand that? Nod if you understand. Yes, that's what we do. We learn and we grow and we understand how to trade effectively. This is a pretty nice little pattern here, though, with the fact that the price established a lower high and a higher low just before breaking through that threshold. That does reaffirm and reiterate this being a support range for us. So again, nothing spectacular or phenomenal there, nothing really different than before. The truth is, though, we're over 70 on the RSI. Until this comes back down, we have no reason to take a short position or to close your long position in profit. If you have a long open, maintain it, hold it. There's no reason for this to discontinue. When you break through 70 on the resistance there on the RSI, sounds really strange and weird, but the price is more likely to continue higher than it is come lower. And I know it seems kind of odd because it's extremely overbought, right? Why in the heck is it still going up? But this is a very common occurrence in crypto trading. When you get over 70 on the RSI, you've broken through a specific threshold, which in this point is probably that $64,000 range. And now, if the price does pull back to that level, we'll see a bounce off 64. My money is 64,500, because if you do take a look at some key fib levels here, that 0.618 for the macros hanging out right there at 64.5. So if we do see a pullback, I would consider a long at 64.5 right now in the blind based on a spot bag. I'm not going to just jump into a leverage position with that, but that's just kind of an idea or a consideration to kind of throw out there. That really just reaffirms we have a lot of support below us, and heaven forbid the price does pull back, we start to see Bitcoin dominance come down, all start to bleed out. We're probably going to see a pivot off of their 0.5 fib levels. A lot of altcoins are right at that 0.618, holding strong, and soon to break for a lot of them, as a matter of fact. Either way, that's a conversation for another day. Watch my other analysis if you're curious. We're here for Bitcoin. Let's go ahead and summarize the Ichimoku Cloud on the hourly. Reiterates and reaffirms there's no reason to consider a short position. We have a natural breakout here with this bull pennant type of pattern. So again, very, very standard stuff. We're seeing this happen a lot where you got like either a cup and handle, an ugly cup and handle for some alts, or just a bull pennant pattern that breaks out. The reason why this is breaking out isn't because it's a pattern, it's because everything else is confirming that it's more likely to continue higher with this amount of volume we're seeing. Okay, so please understand, folks, if you see patterns, you're like, oh gosh, I'm going to take a trade because of this one pattern, you're doing it wrong. Those patterns have to have confluence with other factors on the chart. So you can't just take a long or a short in the blind because of a pattern. Granted, they have a higher statistical chance of success because you look at our patterns here. Of course, bull pennant patterns are one of the lower success rates. But as you continue to look at these, they all start to have more and more probabilities. Like, oh my gosh, I found a bearish rectangle. If that bearish rectangle exists and everything else is bullish, it's not going to work out. Okay, please understand that. So again, just some friendly advice. Be very careful trading patterns alone. Everything else here reaffirms the fact that we should break out to the upside because there's other confirming factors also in line with this. Anyways, I like to make sure people understand how that works. It's, again, never an exact science, but all we're doing is increasing our odds of success by consistently looking at specific indicators. The thing I want to kind of reaffirm here too, because a lot of folks give me that question and ask me, how many time frames should I use? No more than 3 or 4. I know it sounds kind of crazy and weird, but if you're inundating yourself with too much information, you're going to get paralysis by analysis, right? You're going to overdo it. Some people have like a 27-minute chart and a 1.5-hour chart, a 2-day, a 14-hour chart. All this crazy garbage, in my opinion, doesn't work very well. You need a small, medium, and a large time frame that helps you make an evaluated decision so you can come up with a better consensus. Okay? Again, all we're doing is increasing our odds of success by understanding little bits of information from each time frame. And please, 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 if you're using every single indicator out there, market cipher, Elliott wave, and all that stuff, they all work well, but they're not like the holy grail. Some people seem to put way too much emphasis on it. Me personally, I like to diversify and use a lot of smaller indicators on more specific for different time frames. Okay, anyway, sorry, I go off on tangents sometimes. I apologize, that's just part of what I do here. And again, it's mostly just based on so many people coming over to me after watching terrible traders, typically the moon boys that want to recommend 20, 30, 40, 50x leverage trades. For example, these trades that we take, one last little thing and I'll stop. All these trades here that we took here recently, we have significant amount of profit, but they're only 5x leverage trades. Like Solana, 27%, 5x leverage. Near Protocol, 34%, 5x leverage. Bitcoin, this one was a short, almost 20% if you round up. That was a 10x leverage trade. A 10x Bitcoin, 5x everything else. I recommend you find a good risk tolerance that works best for you, because mine probably doesn't work well for you. But I can tell you, in the big picture, the way that things move here, if you're using too high a leverage and you're getting liquidated, you're doing it wrong. You should never face liquidation, not once. It should never happen, okay? Please understand that. Okay, all right, I've said my piece. Thank you so much again for watching. You want to join us over with Bitunix, Phenomenal Exchange, link down below. Check them out. They are really awesome. Bitcoin is running right now, so awesome stuff. All right, I'll go ahead and post our chart here in a moment. Thanks again so much for your time. We'll see you next one. Take care.